Good people, welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers, a lot of bots. I would never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. Get down in that description box. If you don't mind, do me a big favor. Click on that Instagram link, Richard Fain Millionaire Mentor Instagram link, and consider giving me a follow on Instagram. Now, if you're already on Instagram and you're following, your favorite athlete or your favorite entertainer or your favorite movie star or your favorite politician, put me on the short list. Put your boy on the short list. Put me on your Instagram people you need to hear from on the short list, right? That link is down in the description box. Go click on that Instagram link. I'm trying to get the new Instagram page going. And right now we got over 3,000 people who are following me, which is awesome. I'm starting to post more content. I just put a reel up yesterday that I thought was, to me, it was a funny reel, but it was right. It was a Dave Ramsey reel where he was talking about, how people have these cars that they pay monthly payments for, $500 monthly payment for a car. And Dave Ramsey was saying, don't you know, if you were to take that $500 and invest it from 30 years old to 70 years old, you'd have $5 million. And I was like, whoa, I got to tell my people this. So I did a little reel on the Instagram page. So if you haven't seen that reel, get down to the description box, click on the Instagram link, Richard Fain Millionaire Mentor, and get over to Instagram and give me a follow and look at those reels that I got, man. It's all about financial freedom. Also, I'm giving you a little bit of glimpse of my lifestyle when I'm not on YouTube. So if you want to follow me and get more of a daily dose of Richard Fain, get down to the description box, click on that Instagram link, give me a follow, and then send me a DM to let me know that you're rocking with me so that I can thank you for being such a loyal subscriber and someone that supports me. Because my goal here is to support you. That's why I'm here every day at 10:30 a.m. Eastern time, 365. So I can help support your dreams of getting to your pot of gold at the end of the rainbow so that you can do what? Control 100% of your time. So that you can have more freedom. So that you can have more choices in your life. So support me too. I need support too, guys. Just like you need support, I'm here to support you. I need you to support me. So get down to that description box and click on that Instagram link, Richard Fain Millionaire Mentor, and give me a follow. Thank you. Next thing I need your support on is my new website. That's the second link down in the description box. Richard Fain Millionaire Mentor website, www.richardfain.net. Now, over 100,000 of you guys have already visited the website, and it's 3 to 4 week existence. Now, I haven't went out and paid any money to drive traffic to my website. I drive traffic to my website by providing value to you guys that can help you get to your pot of gold at the end of the rainbow. And then in return, you provide value to me by going to the website and checking out the digital products. That again is an investment in you, not in me. It's an investment in you. And then taking that information and executing on it to get yourself to your pot of gold at the end of the rainbow. So if you want to support me, just like I support you every day on this YouTube channel, do me a big favor, go check out my website. That's how you can support me, guys, right? We're here to make this a win-win situation for all of us. My part of the win-win situation is to get my butt on this YouTube channel every single day, 365 days a year, and give you financial information that can help you reach your financial goals. That's my part of the deal. Your part of the deal, at least from my perspective, is you support me too, right? I support you, you support me. So please get down to the description box, click on the website, go take a look at them digital products. And then if you want to take it one step further, if you want to be mentored by me, then join my mentorship club. That's through the website as well. As soon as you get to the website, you're going to see a membership box, a yellow membership box. Click on that yellow membership box. It's going to take you to my Discord. When you get there, sign up, become a paid mentorship club member. So what do you get for that? You get me. You're going to get 90 minutes every single week where I provide a private live stream for my mentees, where I answer questions for that full, matter of fact, it's been over 2 hours. The first 2 sessions we've had, I've been on that private live stream for 2 hours, answering questions people have, walking them through my 30 years of experience as a commercial banker, 30 years of buying real estate for income, putting tenants in those properties, taking care of those tenants, increasing the rental income, increasing the appreciation of the property, and getting to wealth. I also lend my 25 years of investing in the stock market on my own. No financial advisor, on my own. Not that I'm an expert, I just figured out I cracked the code. I've cracked the get rich, get wealthy code. So I've taken that information that I got out of the safe, out of the 1% of the wealthiest people in the world. I've cracked their code. I've taken their secrets out of their safe, and I've used them for 25 years to build my wealth. And that's what I bring to the table when you become a mentee in my mentorship club. And you got access to me 7 days a week, 365 days a year. All you got to do is direct message me through the Discord. Boom, I'm there. So, hey, again, man, many people have signed up. We're going to cap this thing at a certain number. We're getting close. So we got some spots left. If you want to change something in your financial life and you want a mentor who, I just don't talk the talk, but walk the walk. I don't just talk the talk, I walk the walk. If you want a mentor like that, then consider joining the mentorship club through the website. Now, the last thing I need you to do for me, and we're going to get into these meat and potatoes. I need your support. First link down in the description box, the Moo link. Moo is my self-directed brokerage app that I use, my primary app that I use, that I'm going to double my net worth over the next 10 years. Now, just by using the Moo app, I don't double my net worth, but I'm going to use the Moo app to buy paper assets. The paper assets is what is going to double my net worth. The 3 big boy paper assets that I'm buying. Big boy blue chip, right? But I'm using the Moo app. So if you want to rock with me, use the same brokerage app I use. I don't care if you got 2 or 3 other brokerages. It doesn't matter. You can still use Moo as well. I got 4 brokerage apps, or 4 brokerage accounts. And I use all of them, but Moo is the primary one, right? That's my day-to-day. So all I'm asking you to do is consider using the Moo app as your day-to-day. So you can buy paper assets to get to your financial freedom. You can get to your pot of gold at the end of the rainbow. And here's the nice thing. If you sign up for Moo, limited time offer, they're going to give you 10 free fractional shares of the Magnificent 7 stocks. The most valuable companies in America, the top 7 most valuable companies in America, or at least the top 10. Let me correct that, the top 10. They're in the top 10 most valuable companies in America, top 15 most valuable companies in the world. They're gonna give you fractional shares of those companies, their stock, for free. All you gotta do is open your Moo account, put $100 in it, and you're off to the races. Now you take that $100 and do what I'm gonna do with my money. I keep buying assets, fractional shares, whole shares, whatever I can buy, I buy. And I just hold it long term. See, we're going to be talking about some stuff here today that if you're not buying assets right now, you're not trying to get wealthy. If you're not buying assets right now, you're going to miss out. Inflation the April inflation report just came out this morning. And I'm gonna share with you why that report is so important to building wealth and how that inflation report is gonna help me build wealth. How the Federal Reserve is gonna help me build wealth. Those two, the inflation report and the Federal Reserve, how are they gonna help me get rich and build wealth? I'm gonna walk you through that today. But in order to take advantage of any of that, you gotta have a brokerage account. That's where the Moo comes in. Sign up today, guys. Go get that free stock. Go get that free money. Come rock with your boy. And if you don't know how to use the app, no problem. Send me an email. Richard, signed up for Moo, put my $100 in. I'm ready to rock and roll, but I don't know how to use the app. Okay, great. I'm gonna send you this tutorial video that I did to walk you through the basics of the Moo app. You can hit the ground running. I'll send you that email. Well, Richard, I don't even really know what investments I need to buy. No problem. I'll send you a video showing you the 3 big boy blue chip paper assets I'm buying that I've already vetted. Now, no guarantees in this life. Any investment can go the other way on us, right? I can't guarantee you nothing, but what I can guarantee you is these are the 3 big boy blue chip assets I'm buying that I believe will double my net worth. If you want to copy my plan, copy it. Nothing wrong with that. You're your own person. You're your own financial advisor, just like I'm my own financial advisor. Hey man, copy my plan. I can tell you right now, if we look at my investments today, my 3 big boy blue chips, they're all in the green, baby. Only one ain't in the green, that's Tesla. All the rest of them in the green. So I'm doing something right. Copy the plan. I keep telling y'all, why you want to create a new wheel? Use the wheel that's already working. That's just my little 2 cents. So get down in the description box and support me, man, on my links. Support me just like I support you. I ain't trying to sugarcoat this thing. I ain't trying to fool you. This ain't no 3-card Monty. I'm going to ask you to support me just like you asked me to support you, right? That's what we do. We got to support each other, guys. That's what we don't do enough of. We don't stick together enough. We want to get a little something and don't want nobody else to have it. Oh, golly, I ain't going to help nobody. I don't want them to have none of what I got. I want to be the only one. That crab in a bucket mentality. We got to get out of that mentality, guys. This crab in a bucket mentality that we're in, we got to stop it. We got to support one another. I'm doing the right thing because that's what I'm called to do. I wouldn't be able to go to sleep at night if I misled you guys. Whoever been rocking with me, this is my 5th year on YouTube full time. 5th year since 2020, January 2020. Ain't nobody can tell you through these YouTube videos, my one-on-ones, that I misled them. I would never do that. I couldn't sleep at night. My mother didn't raise me that way. I'm here because I want to be here. I'm here because I want to help, but I also need help too. I need help too. I need you to help me just like I'm helping you. That's how we got to be, guys. We got to get out of this crab in a bucket mentality. Oh, golly, I got this and I don't want him to have this, so I ain't going to help nobody. What is this? That's why we're at the bottom of the totem pole when it comes to wealth in this country, because of our crab in a bucket mentality. That's why we control 3% of the wealth in this country. Other groups control 97%. Why? Because we're the only group with this crab in a bucket mentality. Self-sabotage. We don't need no help being sabotaged by nobody else. We sabotage us. Okay, let's move on. Let's move on. Y'all know me. I do. Okay, let me get into the meat and potatoes. Let's go. Here we go. Okay, here we go. All right, I got you. I'm off the soapbox. Let's move on. Okay, so this morning, we got the CPI inflation report for April. And I gotta say, guys, I was pleased. Because see, yesterday, we went through the PPI inflation report for April, which was the business, right? Price index, the producer price index. We went through that yesterday and it wasn't good news. It wasn't good news. So I wasn't real optimistic about the CPI, the consumer price index inflation report for April. I was not very optimistic. I thought, it's gonna come out bad. But guess what, guys? Woo, we did okay. And let's walk through it. Let's walk through it. Here's the headline. CPI report shows inflation easing in April, with consumer prices still rising 3.4% from a year ago. But don't worry about that. That's okay. The key word is easing. That's the key word. That means it's coming down. It's slow to come down, but it's coming down. It's not going up. Remember yesterday, the PPI report showed it was going up for businesses. But this report shows it met expectations and even easing a little bit. That's good news. Why? Because that's what the Federal Reserve needs in order to reduce interest rates. When interest rates are reduced, assets go up, right? So that's what we need, good news. Now let's go through the report and find out exactly what happened. Inflation eased slightly in April, providing at least a bit of relief for consumers while still holding above levels that would suggest a cut in interest rates is imminent. Now, what they're talking about there is the Federal Reserve has a target inflation rate, and it's 2%. Right now, today, we're not at 2%, so that's what they're talking about. Fed want us at 2% because they believe that's where our economy thrives the best, when inflation is at 2%. What is inflation? Inflation is simply the increase in our cost of our goods and services, the increase in price of our goods and services, whether it be month over month or year over year. That's what inflation is. The Fed says 2% is okay. We're okay if the prices of our goods and services increase year over year by 2%. That's okay. That's manageable. It's not manageable long term if it goes up higher than that. If prices increase higher than that, then that becomes not manageable and we have to manage it. And the way they manage that is through increasing interest rates, right? So the good news is the report for April for inflation was cooler than expected. What does that mean? That means there are experts out there who say, okay, inflation should be this. And when the report comes in, if it ain't that, if it's higher than what they say it should be, that means it's hotter than expected. That's not good. When it's lower than they expected, that means it's cooler than expected. That's good. But today's report was more just a even report. It wasn't hotter. It wasn't cooler. It was just what the experts expected. That's good news, though, because we didn't miss expectations. We met expectations. We didn't exceed expectations. We simply met expectations, but that was good enough for the market. And I'll tell you why in a minute. So let's keep moving. The Consumer Price Index, a broad measure of how much goods and services cost at the cash register, increased 0.3% from March. The Labor Department's Bureau of Labor Statistics reported Wednesday. That was slightly below the Dow estimate for 0.4. So the experts said, okay, from March to April, prices can only increase by 0.4%. That's where we needed to be. We beat that though, right? Because it came in at 0.3%. So we beat expectations on that month over month. We beat expectations on headline inflation. We beat it. So that's good news, right? That's good news. That's what the Fed wants to see. So let's keep moving. On a 12-month basis, remember we talked about month over month, year over year. So on the month over month, we beat it by 0.1%. We beat it. But here is the 12-month though. Let's take a look at the 12-month or the 1 year. On a 12-month basis, however, the CPI increased 3.4% in line with expectations. What does that mean? Those same experts said, okay, year over year, we only want to see inflation go up by 3.4% year over year. Guess what? When the CPI inflation report came out today for April, guess what happened? It went up year over year by 3.4%. So we met expectations. We didn't miss. That's good news. So on month over month headline, we beat expectations. Over year headline, we met expectations. Doing great so far. The Fed loving this, right? They loving it. Now, let's move on to what they call core inflation. So you got headline inflation, you got core inflation. Let's move on to core inflation. What is that? Core inflation excludes food and energy, right? It excludes food and energy because those prices are so volatile. They're so volatile, right? So they strip those out. That's what they call core. It says the key core inflation reading came in at 0.3% month over month and 3.6% on an annual basis, year over year, both as forecast. So that means the expert said core inflation, when you strip out food and energy, core inflation would come in at 0.3% month over month, an increase, and then it would increase 3.6% year over year. The report met that. So we met expectations. Didn't miss, didn't exceed, just met. But that's still good news, right? The core 12-month inflation reading was the lowest since April 2021, while the month over month increase was the smallest since December. So far, so good, guys. This report has been fantastic, both on the headline inflation side and the core inflation side. We are doing great. Great, good news. How did the markets take it? Well, markets reacted positively. After the CPI release, with futures tied to major stock indexes rallying and treasuries tumbled. Like I tell you guys every day, the difference between the two, right? Treasuries, U.S. treasuries, they compete with the stock market. They compete for the same investors. You always know when the stock market is typically doing well because you'll see treasuries in the red. Treasuries will be doing worse. They will be lower. Today, pre-market, and we're going to talk about post-market in a minute, but pre-market, which is before 9:30 a.m. Eastern time, is pre-market. The futures for these three indexes were booming, right? All that is what? FOMO and optimism coming back to the market. That's FOMO and optimism. We got such a great report. We were longing for some good news because remember, the first three CPI inflation reports for this year were not good news. It wasn't good news. So the market was just chomping at the bit. They were salivating for some good news, and they got it this morning in the April CPI inflation report. So guess what? Futures basically is pre-market, before the market opens, right? Forecasting what the market will do. It's the future, right? 8:30 in the morning, 6:30 in the morning, 7:30 in the morning. They're forecasting what the future, which is 9:30 a.m. Eastern time, is the future when the market opens. They're trying to determine what's going to happen. So futures were doing well. We're going to talk about, that's pre-market. We're going to talk about post-market in a second. Futures traders raised the implied probability that the Federal Reserve would start cutting interest rates in September. See, now we're back. See what I'm saying? We get one good positive report out of CPI. Boom. Now rate cuts are back on the table. And matter of fact, they're not just on the table. They're back on the table in the third quarter instead of the fourth quarter. That's how it works, guys. That's why this data we get is so important to us building wealth. The more rate cuts we get, the more stock market goes to the moon. That's my opinion. I'm no expert, but I'm giving you my opinion. If we get 3 rate cuts, that's better than 2. 2 rate cuts, better than 1. If you want to build wealth, these rate cuts are going to help you get rich. So I want as many as we can get this year because I can build my wealth more. My assets be worth more. The more rate cuts we get, the more valuable my assets are. That's the way it works, right? This is the first print in a month that wasn't hotter than expected. Just like I said a few seconds ago, first three reports were hotter than expected. This report was not hotter. It wasn't much cooler, but it met expectations. That's good enough. The market needed some positive news, man, and we got it. So good news there. We got it. And we're going to tie this thing in here in a second. We're going to tie it all in. In other economic news Wednesday, retail sales were flat on the month compared to estimate for a 0.4 increase. That figure is adjusted for seasonality, but not inflation, suggesting consumers did not keep up with the pace of price increases. For this inflation report, price gains on the month were driven heavily by increases in both shelter and energy. Shelter is always a hot one, guys. Shelter, man. Shelter is always, shelter cost makes up 1/3 of the CPI inflation report. 1/3. So that's huge. That's huge, right? Shelter costs. Shelter costs, which have been a particular trouble spot for Federal Reserve officials expecting inflation to come down this year, increased 0.4% for the month and were up 5.5% from a year ago. So shelter continues to be a pain in the neck. It continues to fuel inflation. It continues to be sticky and won't come down. Therefore, your overall inflation percentage won't come down. Got to get shelter under control if this thing is going to work in our favor, guys. And right now, it doesn't look like it wants to get under control. It's been stubborn. Both are levels uncomfortably high for a Fed trying to drive overall inflation back to 2%. So if you're thinking about, well, golly, Richard, what in the world is causing inflation to be so sticky? Why won't it come down? Shelter. Shelter. Shelter cost is a monster. And it won't relent. It won't go away. And that's what's keeping inflation, for all intents and purposes. That one thing alone, in my opinion, is what's keeping inflation from coming down to 2%. The energy index rose 1.1% for the month and was up 2.6% on an annual basis. Food was flat and up 2.2% respectively. Used and new vehicle prices, which had been contributed to the early rise in inflation during the worst of the pandemic, both declined, falling 1.4% and 0.4% respectively. So used cars and new car prices fell month over month, year over year, right? So that's not the culprit. Food was flat. It was up 2.2% for the year, but flat, basically, right? Not bad, because again, 2% is okay for something to go up, because that's where we want inflation at 2%. So if food goes up 2% a year, that's okay. That's expected. Y'all know costs are gonna go up. You can't have your eggs 50 cents for the next 100 years. They're going to go up. But 2% is where we want them to go. We don't want them to go up 25%, right? So 2% growth in food ain't bad. Used and new cars actually went down slightly. Like I said, the 900-pound gorilla is shelter. That's the one we can't get down. This thing is 5.5% year-over-year growth. We can't get it down. Now, if we can get that down to 2%, 3%, woo, we'd be in good shape. Got to get it down, though, guys. Can't get it down. So it's been stubborn. Areas showing notable gains on the month, including apparel, 1.2% increase. That's okay. Why? Because it's under 2%. I don't care about that. Nothing under 2%, I don't care about it, because that's expected, right? We expect clothing, apparel, shoes to increase by a little bit every year, because that's just the cost of doing business. They got to pass that on to us, right? We get it, but we want it 2% or less. So that 1.2% in apparel, I ain't mad at. Transportation services, 0.9%, I ain't mad at. Medical care services, 0.4%, I ain't mad at. For transportation services that took The annual increase up to 11.2. Services, including energy, a key point of policymakers, increased 0.4 on the month and was up 5.3 on the year. So all that 5.3 on the year, 4.3, that's too high. It's too high. But the main one is shelter. That's the main one. It's a third of inflation. We got to get shelter down some kind of way. We got to. The inflation increase was bad news for workers. So the inflation increase was bad news for workers who saw earnings fall 0.2% on the month when adjusted for inflation. And on a 12-month basis, real earnings rose just 0.5%. So wages falling, earnings falling, right? Not even keeping up with inflation. Just saying, guys, I can keep telling y'all, got to get multiple streams of income out here to survive. That one stream of income you got, that primary stream, please, guys, get you more than one stream of income. You're setting yourself up for failure. You are setting yourself up for catastrophic financial failure if you only got one stream of income. You just are. My recommendation, start working on side hustles ASAP. ASAP. Please prepare for bad times in good times. You prepare for bad times in good times. Get your multiple streams of income. And the shelter components, both rent of primary residence and the important owner's equivalent rent, or what homeowners think they can get to rent their properties, rose 0.4% on the month. They respectively increased 5.4 to 5.8 on it. So rent going up, guys. Year over year, 5.4 to 5.8. Rent going up. Rent going up. Rent's going up. So here's the dilemma for the Fed. Here's the dilemma for the Fed. The reports come with the Fed on hold since July 2023 as inflation has proved more resilient than expected. Policymakers have said in recent weeks that they need more evidence inflation is on a sustainable path back to 2% goal before agreeing to lower rates. Okay, that's what the Fed is saying. And they've been saying that since July of 2023. Almost a year they've been saying that. And inflation has been what? Sticky and stubborn. Just hovering around 3% all that time. I mean, for almost a year. Right? Almost a year. The Fed's benchmark overnight lending rate is targeted in a range between 5.25% and 5.5%, the highest level in 23 years. So rates right now, guys, Fed funds rate, which is what banks borrow money from each other. See, banks borrow money from each other at this 5.5 Fed funds rate. That's not what you and I borrow money from banks at. We borrow at the prime rate. And the prime rate is 3% higher than the Fed funds rate. So if I go into my local bank, I want to get an equity line on my house, it'll probably be prime plus something. Whatever the bank wants, that plus is whatever the bank wants to charge you. If you're a good borrowing candidate, you may get it for prime plus 0. You may get it for prime minus 51. I got a line of credit right now, it's prime minus 51. So my variable rate right now is 7.49. I got a 0 balance on the line, so I'm not paying any interest on it. But since I'm a prime borrower, I can get a discount on the prime rate because the bank gives you a discount if they feel like you're qualified enough to get the discount. But my point is, it's the highest level it's been in 23 years. It's higher than it was, guys, during the great financial crisis. That's the crazy part about it. The great financial crisis was 2008, guys. And the Fed funds rate is higher now than it ever was back then. Now, I get it. The Fed reduced rates to 0 to stimulate the economy. I get that. But I'm talking about prior to. I'm talking about 2005, 2006, when things were just bonkers. Now, when we fell off the cliff in 2008, I get the Fed reducing short-term rates because they want to stimulate the economy. I get that part. But what I'm saying is prior to us falling off the cliff in 2008, I'm talking about 5 and 6, when things were just people making money hand over fist, more demand than supply. It still wasn't a 5.5, right? So my point is this is tough on our economy. It's tough for middle class and lower middle class earners. 1%ers ain't getting affected by it, but we are. Higher for longer is crushing us. So therefore, yes, this report today was good news. That's one piece of, actually it's 2 pieces of good data that the Fed had in April. The first one was what? Somebody in the chat tell me what the first report we got in April that was good data for the Fed and it supports the Fed case of reducing rates. What was that report? First report in April. First report in May for April. First report we got in May for April that was good data. There you go, jobs report. Remember, we got the jobs report for April. We got that at the first part of May. And that jobs report came in weaker or cooler than expected. That's good news because the Fed has already went on record saying we need the labor market to cool off. And guess what? That report showed that it was cooling off. So that was the first piece of good news. Now, the second piece of good news was today, the CPI inflation report. This is the second piece of good news. So now what? The Fed is going into their next meeting when? June 11th and 12th. They're going into a new meeting, a FOMC meeting, June 11th and 12th. Now, what's got to happen, though, is we got to get good news in May as well. So that May jobs report that comes out early June, we got to get good news. And I think, if I'm not mistaken, we may have the May CPI report during the Fed meeting in June. If we can get 2 pieces, that'd be great. Now, we're not going to get rate cuts in June. We're not going to get rate cuts in July. But boy, we can get rate cuts in September. So that's what we got to continue crossing our fingers that we get a couple, at least 1 more month of good news. In remarks Tuesday, now this is Tuesday, guys. This was yesterday. Fed Chair Jerome Powell acknowledged that readings earlier in 2024 had been higher than expected and said it's likely the central bank will need to keep monetary policy at the current rate for longer than had been thought. He just said this yesterday. Now, this was before the CPI inflation report for April now. But yesterday when asked, he supported keeping rates higher for longer because the data that they've seen for the first 3 months of the year was not the data they needed to see. That data said keep rates higher. So that's what they did. If they get enough data consistently that says, no, inflation's still going down, we can do a cut, then they'll do the cut, guys. See, the Fed is not opposed to cutting. They want to cut, trust me. I'm sure the White House is calling them every day. When you going to cut? When you going to cut? We need this good news. This is an election cycle. We need the cuts. So I'm sure they're getting pressure from the White House to cut. So any good news they get back to back, they're going to cut. It's an election year, guys. And I'm sure the White House is all over them. You got to know that, right? They're all over them. So any good news the Fed get, they're going to cut. That's where you and me come in. That's where we come in. That's how we get rich. Since we know this, what should we be doing right now? Buying assets. We should buy them hand over fist. We should be buying assets as much as we can afford. Big boy blue chip assets right now. We should be buying while they're at a discount. Oh, what do you mean they're at a discount? Everything's in the green today. They're at an all-time high today. I don't care. I see what you think. You think because the S&P 500 is at 52 today, 52 and some change, it won't go any higher. See, that's where we're naive, guys. The S&P 500 is going to go higher than 5250 or whatever the hell it is today. It's going to go higher than that. Matter of fact, in the next 10 years, 8 to 10 years, it's going to double to 10,000. That's your boy's prediction. Not scientific, not giving you financial advice, just giving you my opinion. It's going to double in the next 8 to 10 years. It's going to go to 10,000. So you sit on the sideline thinking, I'm going to wait until it fall back down to 4,900. You can do that, and you might get that wish. Maybe, maybe not. But I'm not taking that chance. I'm buying every day. I don't care if it is at 5250. I don't care, because I believe it's going to 10. I think it's going to 10,000 points within 8 to 10 years. It'll be at 10,000 points or sooner. So guess what? It's on sale to me, right? SPLG, my S&P 500 ETF, on sale. It's $60 a share, $61 a share. I think in 8 to 10 years, it's $300 a share. It's on sale to me right now. You better stop listening to all this propaganda and start getting into marketing, buying some assets, and understanding how this stock market thing works. If this stock market thing didn't work the way I think it works, nobody would be investing in it, guys. People invest in the stock market because it has 100 years of working. I guarantee you on day one of the stock market, 100 years later, it's worth more 100 years later than it was on day one. And 100 years from now, it's going to be worth more. That's the whole premise of it, right? I don't know why we sit around here acting like, oh, golly, it's too high. It'll never go higher. Yeah, it will. What do you think the S&P 500 was 10 years ago? Somebody in the chat tell me what the S&P 500 index was trading at 10 years ago, please. Somebody in the chat, because I'm trying to prove a point here. We got to stop all this sitting on the sideline and, oh, golly, no, get in. What are you waiting on? You want to build wealth? You want to get to your financial freedom? You want to control 100% of your time? Get in. What are you waiting on? Oh, I'm gonna do like the billionaires do. I'm gonna wait till the billionaires are billionaires. You keep missing the point. They're billionaires. They can move in and out when they want to. They got billions of dollars. We got hundreds of dollars. Right? See, 2014, the S&P 500 guys was trading at around 2,100 points. 10 years ago. This was after the great financial crash too. Oh, it was doing that because of the great. No. This was way after this was 6 years after the 2008 downturn. It was trading at about 2,100 points. Guess what it's trading at today? Over 5,200 points. That's more than it doubled. It's more than doubled in 10 years. What do you think it's going to do in the next 10 years? With all this AI technology hitting the street, with companies like NVIDIA and Amazon and Alphabet and Apple and Meta and Microsoft and Tesla. When all these great chip companies are battling and trying to outdo each other and just creating such wealth, what do you think it's going to do in the next 10 years? While you waiting around thinking it's going to fall back down to 4,800 and waiting on some miracle, some Hail Mary, keep on waiting on the Hail Mary. I'm just going to keep buying every day. Keep buying. This is why I'm telling you the Fed and the inflation report can make us millionaires. How can the Fed make me a millionaire, Richard? The Fed can make you a millionaire because they're going to reduce these rates. And when they do, I've already told you guys, rates come down, assets go up. So while rates are up right now, what should I be doing? Buying assets. Because when rates go down, those assets that I bought when rates were high do what? Go up in value. That's how the Fed makes us rich. Just follow the financial breadcrumbs, guys. We got to stop this with this, for some reason, think we got to be some expert like an analyst or something. Oh, I need to know everything about the stock market before I do anything. I need to be You're going to stay broke. You're going to stay down here in this cesspool economy and be broke. Why people like me and others on the chat are taking advantage of these opportunities. I ain't no expert. I buy every day. I'm not an expert. Not even close to it. Not even close to it. Couldn't even tell you all the terminology. I don't even understand all the terminology I'm reading you right now. But you think that's stopping me? Do you think that has stopped me for the last 30 years of building my wealth? It hasn't. See, because I understand I don't need to be the expert. I just got to find a blueprint that works and copy that plan. That's all I've done, guys, over the last 30 years. I found a blueprint that works, and I just copy the plan and trust the process. Because I said to myself, if Robert Smith, one of the richest black men in the world, has his money in the stock market, maybe I should put mine in. If Warren Buffett got his money in the stock market, maybe I should put mine in. Michael Jordan got some of his money in the stock market, got his money in businesses. Maybe I should put mine in the stock market and businesses. Michael Jordan got his money in real estate. Maybe I need to put some of my money in real estate. Jeff Bezos got pretty much most of his net worth tied up in his company he started, Amazon. Why does he still got it in Amazon if the stock market's a scam? See, guys, we just don't even, it's just basic common sense. Basic common sense, guys. If the stock market fails, our country fails. Who in the heck is going to let our country fail? Nobody. I hope not intentionally. The 1% ain't going to let our country fail. The 1% either make their money in the stock market or they hold it there. The 1% either make their money in real estate or they hold it there. The 1% make their money in businesses or they hold it there. Why do they hold it there? Because it generates income for them. That's passive income, guys. See, wealth is about passive income, right? That's what wealth is about, creating passive income. That's what the 1% are masters at. They are masters at manipulating you to work your whole life. They are masters at manipulating you to work your whole life to buy stuff. Because see, you associate your success with stuff. They are master manipulators. They have manipulated 99% of our population in this country to go to work every day and work our tails off 8, 9, 10, 12, 15 hours a day for stuff. They've done a great job because most of us, that's what we do. We go to work and we buy stuff that are liabilities that we think are assets, but they're not. We go buy these $1,400 SUV per month car payment on an SUV. I mentioned earlier in the chat when I first started, I put this Dave Ramsey clip up that I love. I'm a big Dave Ramsey guy. I don't follow everything Dave says, but I'm a big Dave Ramsey guy. I don't follow all I ain't drinking the Kool-Aid all the way, but I do follow him and I love some of his stuff. He had a little thing yesterday that I did a little reel on. I did a little side by side and put it on my Instagram and my Facebook, where he basically said, people are out here spending money on these cars, right? He's like, $500 car payment. If you take that $500 and you put it somewhere from age 30 to age 70, you got $5 million. He said, people around here driving $1 million, $2 million, $3 million, $4 million, $5 million car. And he is so right. But that's how we've been programmed, though, see? Can't see the forest for the trees. We cannot see this beautiful forest for the trees. We can't see that if we took that $500 a month and put it in something that get it an 8 to 10% rate of return, and we did it for 40 years, we'd be $5 million. We wouldn't have to worry about our golden years. But we can't see the forest for the trees. Because what we're more interested in is pulling up beside somebody at the stoplight and flexing. We're more interested in pulling up to the Little League football stadium and flexing. We're more interested in flexing on Facebook or flexing on Instagram. That's what we're more interested in. That's what we're more interested in. We ain't interested in getting no wealth, not real wealth. We're more interested in superficial crap so that we can get a like, so that we can get a follow, so that we can get this, so we can get an instant little bit of gratification. We're not interested in long-term gratification. We're interested in short-term gratification. If you don't change the way you think, guys, guess what? When you get to 70 years old, when you get to 65 years old, it's not going to be a good situation. Stop spending your money on stupid stuff. Start putting it into assets today. I don't care what the stock market is doing today. Guess what? It's going higher. How do you know that? I did for 30 years. How do you think I get all what I got? If it went down over those 30 years, do you think I'd be sitting here in a dream house, my dream home? Do you think I'd have everything that I have? Do you think I'd be able to sit here and control 100% of my time if the stock market didn't work? I'm no genius. I didn't have no company. I worked for somebody for 25 years. I was an employee. But I was smart enough to take the income that I earned and put it in these assets. And I did it month after month, year after year, decade after decade. And now I get to control 100% of my time and live the rest of my life in peace. What you gonna do? What you gonna do? What you gonna do? What are you gonna do? The financial markets, that means the Fed likely will wait out the summer for better inflation data. With the initial rate cut coming in September, that would be the first reduction since the early days of the pandemic in 2020. They haven't had a rate reduction since the pandemic. And y'all know we hurting. Y'all know we hurting. I don't care what they say about the economy, we hurting. The middle class and the lower middle class earners are hurting. We're hurting something bad, especially if this labor market continues to cool. We're really going to be hurting. Today is the day to change that, guys. Get your butt down to that description box, open up that Moo account, get yourself up to 10 free fractional shares of the Magnificent 7 stocks, put you some money in that account, put $100 in there, you get the 10 free fractional shares. But put you some money in there and start buying today. I'm telling you guys, stop this waiting around thinking you need to be some expert. I get emails every day from people. Richard, I'm signed up, but I don't know. And I say to them, what don't you know? Do you want to be in the position that you're in for the rest of your life or not? No, I don't, Richard. I don't want to be in that position. Then get started today. I don't care what you don't know. Follow the blueprint. I make mistakes. I can't be your financial advisor. I can't hold your hand the whole way. At some point, you got to dig down deep inside of you and pull something out of you that's great, that means more to you than your fear. At some point, guys, we got to do that in our life. We got to figure out deep down inside of us what matters most. And can we come up with something that means more to us than our fear? I don't know why some people feel like if I put my money into something and I lose it, that's the end of the world. No, it's not. You get back up and you do it again. You don't have to be afraid. You do not have to be afraid. We just got to have more courage than we have fear. We got to have more courage than we have fear. 26 years old, I just had more courage than I had fear. And I just started one step at a time, one day at a time. I didn't do it quick. It took me 25 years, guys. It took me a while. I wasn't as sharp as knife in the knife drawer. It took me a while, but that's okay because I'm here now. Since I was 51 years old, I've never worked for nobody else. And I never will again, Lord's will. 51 years old. Now, a lot of y'all might say, Richard, that's too old. Do it sooner. How much courage do you have? Do it sooner. You don't have to wait till you're 50. Do it at 25. Do it at 30. But you better have some courage and some money and not be afraid to fall down and get back up. That's what you're going to need, guys. The good news is you got it. You got it inside of you if you'll just bring it out. We all got greatness inside of us. All of us have greatness in here. Some of us just choose to pull it out. Some of us just don't do it. We never reach our full potential because of fear. 3 things that will kill. They're financial killers. 3 things that are financial killers: fear, pride, and greed. Those are your 3 financial killers. Do you have any of those in you right now? Do you have fear, pride, and greed in you? Those are the 3 financial killers. We think it's September at the earlies that they're going to cut, said North, an economist. Their mind seems to be that we're not in any hurry to cut rates. Inflation is not near 2%. The economy is okay. We're not going to anything for months. Fed officials hiked the key overnight funds rate 11 times from March 22 to July 23 in hopes that it would help tap down demand that drove inflation to its highest level in more than 40 years. Policymakers had thought inflation would pass once supply chain issues brought on by the pandemic eased, but powerful demand fueled by fiscal and monetary policy stimulus has kept price pressures elevated. There you go, man. Good news for the report. We just need more, right? We need more. We need more. How do we get rich? How do we get wealthy? Get your butt in the market now. I'm not your financial advisor. You say, Richard, I ain't getting in now. Then don't get in. If you don't want to get in, don't get in. But one thing I can tell you, from old 30-year vet, been around a lot of millionaires, man, in my banking days. A lot of them. Pretty much every customer I had had a better net worth than me. A couple of them didn't, but most of them had a better net worth than me. So my job was to do what? Listen. Talk less, listen more. And then, once I got the nuggets, execute them. And that's what I did for 25 years as a banker. I would listen to my customers, talk about real estate for income, talk about their business, talk about other assets like paper assets, talk about the fabulous vacations that they take, talk about these beautiful homes down in Naples, Florida, and Port Royal, and some of these other affluent, I'm talking about really, really affluent communities, guys. I can't afford to be nowhere down there. I'm talking about these people had money. But all of them had one thing in common. They all had one thing in common, a burning desire to win. They had a burning desire to win. No matter what industry they were in, they had a burning desire to maximize their full financial potential. And I thought that was intriguing to me because I said to myself, yeah, I done played football at the highest level. So I get it. I get what the commitment you have to be under in order to achieve what these people achieved. But I said to myself, you know something? What I want to achieve may not be what they want to achieve. But what I need to get done is the same thing they got done, which is they control 100% of their time. They got more choices, more time, and more freedom in their life. I want those things. I don't want the yacht. I don't need the house. I don't need the $10 million house down in Port Royal, Naples. I don't need that. I don't need the 100,000 vacation trip. I don't need the private jets. But what I do need that they have, I need that time. I need them choices. And I need that freedom. So let me construct my little game plan together to get me them 3 things. And that's what I did. And that's what I have today. I got more time, more freedom, and more choices in my life because of my courage. Not because I'm smart, because I have courage. See, courage is even when adversity comes, even when I fall down, I get back up, I keep a positive attitude, and I keep moving. That's courage. It's courage. We all have that courage inside of us. We all have that greatness inside of us. The question is, are you willing to pay the price to bring it out? Stop being a victim. Stop having a victim mentality. Oh, I can't do this. I keep telling y'all, take that out of your vocabulary. I can't shouldn't even be in your vocabulary. It shouldn't even be in your vocabulary. I can is what you should be saying. I don't know what they know, but I do know I can get to my pot of gold at the end of the rainbow. Let me find my blueprint. And then what I'm going to do every day, I'm going to do something to get one step closer. Now I got to cut out going to the beauty salon. Now I got to cut out going to Starbucks and getting coffee for $5 every day. No, I'm not buying that new car. I'm going to keep the old car that I got. It's fine. It'll get me to A to B. Nope, I'm not finna go buy some bigger house. I'm going to stay right where I'm at and continue to invest in my freedom, time, and choices. Nope, not doing that. I don't need that. I'm going to continue to put this money in these assets that are going to get me more time, more freedom, more choices. That's what you got to do, guys. Let's take a look at the stock market today. Let's see what the stock market did. Remember, I talked about pre-stock market opening. We talked about the pre-market where the futures was having things buzzing, right? We talked about the pre-market. Now let's talk about the post-market, right? S&P 500, NASDAQ raised to all-time highs after light consumer inflation report. S&P 500, NASDAQ, all-time highs. Here's the question I want you to think about. If they hit all-time highs today on just a mediocre inflation report, I'm talking about mediocre. It didn't beat expectations overwhelmingly. It just met expectations. So FOMO and optimism came back, and it catapulted the NASDAQ and the S&P to all-time highs. What do you think is going to happen when they reduce them interest rates? Now, if a little basic win today catapults them to all-time highs because of that enthusiasm and that FOMO, what do you think is going to happen when they reduce them rates? What do you think? Do you think they'll go to another all-time high? This is what I keep telling y'all, guys, but we some of us just won't catch on. Do you think it's going to go to another all-time high? That's all I'm saying. It went to an all-time high today in two of your three major indexes. And this wasn't even really good news. This was just, it wasn't increased. It decreased a little bit. Thank you, Jesus. That wasn't even the best news. And it went to all-time high. What do you think when real news comes? You better get yourself in this game, man. You better get down there to the description box and click on that Moomoo link and get this Moomoo account set up. Put your $100 in there. Get your 10 free fractional shares of the Magnificent Seven and get in the game. Get in the game. That's all I can tell you. Get in the game. Here we go. The S&P and the NASDAQ popped to record highs Wednesday, adding to their strong 2024 performance as a lighter than expected U.S. consumer inflation report. The broad market index gained 0.3%, as did the tech-heavy NASDAQ. The Dow climbed 147 points, or 0.4%, and was also trading earlier within reach of its record high. So you got three major indexes because of FOMO and optimism almost surpass their all-time highs. I ask you again, what do you think is going to happen to those three indexes when these rates start coming down? I keep telling y'all guys, we ain't even close to where this thing going to be in 10 years. We got to stop being so short-sighted and be long-sighted, not short-sighted. We got to get long, guys. If you just get long and look at the history, it makes sense. It will crystallize itself in your mind. But the problem is we so short, we so impatient, we so get rich quick mentality, we can't see the forest for the trees. We can't see the forest for the trees, but I'm trying to show you the forest today. Please overlook the trees, guys, and see this beautiful forest I'm trying to show you. It's a beautiful forest out there. You just got to look past the trees. Here we go. The broad market index gained 0.3%, and the heavy tech NASDAQ. The Dow climbed 147. The CPI rose 0.3 month over month. We've already talked about that. Here we go. The report boosted expectations for Federal Reserve rate cuts in the near future. Fed funds futures trading data now suggests 51.7% likelihood that the U.S. central bank will ease rates in September. So what should I be doing between now and September? If I'm a smart person, if I'm somebody that says I need more time, more freedom, and more choices in my life, I got 90 days. What should I be doing right now? If I want to put myself in a position to increase my net worth. The writing's on the wall, right? Now we got the expectation of the first rate cut coming in September. I got 90 days. What should I be doing? Somebody in the chat tell me. Somebody in the chat who wants to get to more freedom, more time, more choices in their life. What should you be doing now that you know what the expectation is? I don't know, guys. I don't know. I don't know how I can paint any other picture for you. I don't know how I can paint any other picture for you. The Fed funds futures data now suggests a 51.7% likelihood that the U.S. central bank will ease rates at its September meeting, according to CME Fed Watch tool. This is up from Tuesday, 44.9% chance rate cut the same month. So we go from 44.9 to 51.7 in a day. Why? Because of that April CPI inflation report. Now, put me in the game, coach. I got to get my brokerage account set up, get my Moo account set up. I got to put some money in my Moo account. I got to get them 10 free fractional shares of the Magnificent Seven so I'm positioned to rock and roll. And I got to go to town these next 90 days. That's what I'm going to be doing. I'm going to be buying like a banshee. My favorite stock right now, I looked at it this morning, it's trading at like 9.23. That's NVIDIA. 2 weeks ago, 7.67. This thing gonna be, listen, man, when they come out with them earnings on May 22nd, you're gonna see this thing go past $1,000 a share. You might see it go past $1,000 a share before the earnings, the way it's going right now, guys. But see, this is what I keep telling y'all. 2 weeks ago, I told y'all about this. If you was in the chat, I told you what was gonna happen. Again, I'm no expert, I just follow the breadcrumbs. I'm no expert, I just follow the breadcrumbs. When you're the number one in your industry, when you're the number one in your niche, you're the third most valuable company in the world. You take your revenues 12x in 8 years. You 12x your revenues in 8 years. They got your revenues being at 120 billion this year. You go from 60 billion in 24, they got you going to about 110 to 120 billion in fiscal year 25 or 24, end of 24 fiscal year. You ain't got to be no rocket scientist, man. These people are, I'm telling you, it's so much money to be made out here if we would just get out of our own way and trust the process. I tell you guys all the time, trust the process. Just trust the process. Find you a blueprint that historically has worked and then trust the process. That's all you got to do. So you got 90 days to be thinking about this. I don't know what your net worth is today, but if you want to increase it, you got 90 days to position yourself. You got 90 days to position yourself. Stocks have been on a tear this year. Been talking about this since January. I've been telling y'all since January, get in the game. First, a lot of us just missed the first quarter where we had, an S&P 500 that did 10% in the first quarter. You had the Magnificent Seven in the first quarter of this year. They did a 17% ROI. First 90 days. Give you a 17% ROI. S&P gave you 10. What are we waiting on? I don't know. I guess we're waiting on the great crash. I guess we're waiting on the pandemic, another pandemic or something. I don't know what we're waiting on, man. I don't know what we're waiting on. But I just hate to see people missing net worth opportunity. I hate to see people sitting around scared to death and staying in the same position that they were in 23. They're gonna be end up in that same position in 24 unless they take action now, right? Got to take action now. Got to take action. Stocks have been on a tear this year as expectations for lower rates, Fed rates, and enthusiasm. See, I keep. If you guys watch me every day, what do I say? FOMO and enthusiasm. Because a lot of people are saying, this guy don't know what he's talking about. Rates are high, so why assets are high? FOMO, enthusiasm. That's why. Here's my point. Here's how I prove my point. Now, you remember in January, February, March, when everybody thought the Fed would be reducing rates in June. Remember that? Remember everybody, all the experts, they're going to reduce in June. They're going to do 3 rate cuts. Even me. They're going to reduce. All that FOMO and all that optimism, it did what? It drove up the stock market. That's why you think the stock market had the quarter it had, the first quarter. What happened in April? What happened in April? That FOMO went away. That optimism went away. And what happened to the stock market? Dipped. There was no more FOMO. There was no more optimism because at that point, you done had 3 CPI reports in a row that said inflation was going up. So what did investors do? I ain't gonna be no rate cuts. Let me get my money out of here and go over here to the treasuries. Let me go put this money in the money market. That's what happened to the stock market when that enthusiasm and that FOMO left. Guess what returned today? Enthusiasm and FOMO is back. That's why you got the 3 major indexes at all-time highs. Why? FOMO and enthusiasm is back. What do you think is going to happen in September if they do reduce these rates in September? What do you think is going to happen if June rolls around and we get a really good May jobs report? And we get a really good May CPI inflation report. What do you think is going to happen to the stock market if you get 2 months back to back? What do you think is going to happen? Think they're going to hit new all-time highs? I would say, yeah, they're going to keep hitting all-time highs. I should be on that rocket ship. I should be participating in those all-time highs. See, I'm participating because I'm in the market 365 days a year, guys. I'm investing every day. I'm investing every month. So I participate in all this. The NASDAQ and the S&P going up like they did this morning, I'm participating. I'm in there. My net worth is higher today. When I looked at my account for SPLG and I looked at my FTEC account, hey man, they green, man. They looking good. Green, green, green. Guess what I keep doing though? I keep investing in them, even in they're green. Why? Because they're going to be greener. You think they're green right now. You wait till them rates go down. They're going to be even greener. And in 10 years from now, they're going to be so green, I'm going to have to put sunglasses on. I'll be like really green, like a neon green. I'm going to have to put sunglasses on. That's how green they're going to be. That's how much money I'm going to make. The S&P is up more than 10% year to date. Oh, golly, where are you going to get a 10% rate of return from? Where are you going to get that from? Where are you going to get it? Keep telling y'all, man, we got to stop this. Where are you going to get a 10% rate of return from? How many times have I said the S&P 500 over the last 90 years has delivered a 7 to 10% rate of return? What, 1,000 times on this YouTube channel? How many times have I said over the last 10 years, the S&P 500 was between 10 and 12% rate of return? 500 times. How many times have I said in the first quarter of this year, the S&P 500 did 10%? I don't know where people go listen to that and believe it, but hey man, it's your freedom, it's your choices, it's your time. You do what you got to do. That said, the broad market index stumbled in the past month as worries over sticky inflation pressures in equities. These concerns were quickly, I don't even know that word, by new data and comments from Fed officials indicating rate hikes are likely going forward. Market leaders like NVIDIA, popped upon the reading, with shares of the GPU manufacturing rising 1%. I got to do it. I got to do it. I'm sorry. Let's go look at NVIDIA. We're going to look at NVIDIA. We're going to look at Meta. Let's look at NVIDIA and Meta real quick, and then we'll get back and we'll wrap this thing up. Let's go look at NVIDIA stock today. Listen, guys, NVIDIA is trading at $944 a share. They up $30 today. Who in the chat bought NVIDIA 2 weeks ago when I asked y'all to consider it, put it on the short list? Please, somebody tell me in the chat y'all jumped in that thing and followed the yellow brick road. Somebody tell me they followed the yellow brick road. I put you right on the yellow brick road. Did anybody follow the yellow brick road? Did anybody follow that golden parachute? I don't know, man. I don't know. Let me move on. Oh, God. I told y'all this thing may hit $1,000 before the earnings report comes out in a week or so. This thing may go over $1,000 today. This thing may go over $1,000 today. That's too high at 767. I don't know if I can do it. I'm going to wait till it go down. Okay. Go ahead. Keep waiting. Keep on waiting. Keep on waiting. I'm going to wait till it go down. Okay. I'm going to leave it alone. I'm going to leave it alone. Well, guys, here we go. We're at that crucial point where we got to make some decisions. You know, we got to make some decisions on what we're going to do. So let's pull this thing together and then we're going to get out of here. So the title of the video is what? The Fed and the inflation report getting ready to will make you rich. The Fed and the inflation report is getting ready to make you rich, right? Or it will make you rich. Do this now. That's the title. So let's break it down and bring it all together and then we'll get out of here. How does the Fed make us rich? Because the Fed at some point is going to reduce these rates. All right? When they reduce rates, that means what? More people can borrow money cheap. And then what people do with that money is they buy assets. When more demand comes for assets, guess what that does to assets? It increases the price. So by the Fed reducing interest rates, potentially in September, so we got 90 days to position ourselves, potentially reducing rates in September, that means if I buy assets today and they're the right assets, potentially those assets be worth more when the Fed reduces rates and then become even more valuable once rates do get reduced. Why would they get more valuable if rates ain't reduced yet, Richard? Because of FOMO. That's why they're going to get more valuable, because of FOMO, fear of missing out. Nobody wants to miss out. So what you're going to have is you're going to have all types of casual investors, big boy investors, brand new investors piling in because they don't want to miss out. That runs up asset values. More demand runs them up, right? So that's how the Fed is going to help you get rich. But you got to position yourself. You got to be ready to go. So that's how the Fed helps you get rich. It helps you get rich by these interest rates that it controls, up and down. The interest rates go down, boom, assets go up. So I should be looking for the Fed. I should be encouraging the Fed to reduce rates. And the encouragement comes from this data we just got and other data that will be coming, right? Now, how does the inflation report help us? How does the inflation report help us get rich? Well, the inflation report encourages the Fed to reduce rates, depending upon what inflation does. If inflation stays high, Fed don't reduce rates, we don't get rich. Or at least not right now. I still buy because I know at some point we will get inflation down. Right? So if inflation stays high, how does that benefit a guy like me? Well, I get to buy my assets at a discount. That's how. The higher inflation is, the cheaper I can buy my assets. And then I just hold those assets so they trade at a premium again. So the inflation report is going to help me buy assets at a discount if it's higher. It's going to help my assets go up in value if it's lower. So either way, the inflation report helps me get rich. The key is I got to be buying, though, in order to take advantage of those two scenarios. Go ahead and stay higher for longer, inflation report. It doesn't matter to me. You're just giving me an opportunity to buy my great companies and my great ETFs at a discount. You got to think about it, guys. While inflation was high last month in April, I was able to buy FTEC at a deep discount. I was able to buy SPLG at a discount because they traded in the red the whole month. I was able to buy some of the Magnificent Seven at a discount, AKA NVIDIA. It was $767 in the month of April. Now it's trading at $944. You ain't gotta be no Nobel Peace Prize winning mathematician to figure out if I bought at $767, you sell at $944. It's a lot of profit. Just saying. How did I get that? Well, inflation helped me. Inflation helped me. Well, golly, how can you make money if inflation goes down? Well, those same assets I'm buying today gonna be worth more. That's how. You think NVIDIA at $944 right now, you let inflation come down and the interest rates come down, it could be $1,500, $1,800 a share by the end of the month. End of the year. Could be. I'm not saying it will, but it could be. Buying today at $944 could be a bargain for some of us. This thing could be $1,500 at the end of the year. I'm telling you, man, when they come out on May 22nd, if they beat expectations for the fourth quarter in a row, which I believe they will, this thing is going to go bananas. It's going to go bananas. I already told y'all I'm buying again anyways. I'm buying again. I don't care if it's $1,000 a share. I'm buying it. I'm telling you, I'm buying it before them earnings. For that earnings report come out, I'm in. Because I think it's going to the moon. This is what I think. So all I'm telling you is that's how the Fed and that's how inflation report helps me get rich. I've just broke it down and told you. That's it. That's how I get rich with this information from the inflation report. I get rich if inflation stays up because I get to buy assets at a discount. And I just hold them. I get richer if inflation goes down because all those assets that I bought at a discount, when inflation goes down, guess where they're going? Up. That's how I get rich. I get rich either way with inflation. I get rich either way with the Fed with rates. Either way, I get rich. And the only way I do that is because I'm in the market every day. I buy every day. I buy every month. So my money is constantly in the market. Either I'm buying more at a discount or what I've already bought is going up in value. That's how it works. That's why you can't time the market. You just got to be in it. Because when I'm in the market with my money, either I'm buying assets at a discount or my assets are going up in value to a premium point. But if I'm sitting on the sideline with my money in my money market account, feeling good about myself because I got $10,000 in my money market and it's I'm just feeling great. I don't need that stock market stuff. I'm doing great. The only question you got to ask yourself is if you lose your job, can the $10,000 take care of you for the rest of your life? How long will that $10,000 last if you lose your job? Just ask yourself that. How long will it last? How long would $50,000 last if you lose your job? How long would $100,000 last if you lose your job? Just saying, guys, all you got to do is ask yourself that question. If I lose my job tomorrow and I can't work for 6 months, how do I take care of myself? I don't know. I don't know. You got to ask yourself that question. That's the question I used to ask myself. Richard, if you lost this banking job, you got mad, you walked off the job, do you got enough assets to take care of yourself? No, I don't. Well, you better get out there and get you some. Golly, man, I'm tired, man. I'm tired. I'm tired of going into this job. I don't want to do it no more. Okay, don't go in. Just stay home. What's going to happen when they stop direct depositing the check? Oh, yeah, I guess I better go in there then. See, for me, guys, it ain't hard. I tell you, boy, it ain't hard for me. All I need to do is think about how I'm going to take care of myself if that check disappears. That motivates me. See, now I'm in a situation where I ain't got to worry about that. If I get up in the morning and I don't want to make YouTube videos, I don't make them. I got enough assets right now that are generating income. Plus, I got high income skill set where if I want to, I could do something else. Good news for me is I love making YouTube videos, so I don't ever foresee that happening anytime soon. But I'm just saying, if it happened, I got assets. I know how to go out and make money. I know how to buy real estate for income and put tenants in it, just like that. It's like riding a bicycle. You never lose it. I can flip luxury watches online right now. You never lose the skill set. It may go dormant for a little bit, but I don't lose it. So all I'm telling you guys is put yourself in a position where you're not controlled by someone you work for. Wherever you get your income from, that's who controls you. If your income is coming from assets, you're good. If your income is coming from an employer or some business that you got to be in to make it work, you're not in control of your financial destiny. Your financial destiny, you're in control of it when you have assets that generate income. So all this other noise over here, I don't got to deal with if I don't want to. That's when you're in control of your financial destiny. That's when you can say to yourself, hey, let me draw out the lifestyle that I want. And that lifestyle doesn't include working for these people. Right? If I need this paycheck from these people, I got more work to do. That's all you got to say. If I need this paycheck to live, to survive, I got more work to do. If the only thing I got to live on is Social Security when I get to the golden years, I got more work to do. Because I don't want to be in a position where Social Security is my primary way of taking care of myself. I don't want to be in that position. I want to be in a position where, yes, I want to collect my Social Security because I paid into the Social Security system. But I don't want it to be in my primary source of how I take care of myself. I don't want that. I want my assets to be my primary way I take care of myself. But unless I get myself in the game and start doing something right now, that's not going to happen. And right now, I've walked you through how to use the Fed, how to use the inflation report to position yourself to build wealth. All you got to do is get yourself in the game and ask for the ball. That's all you got to do. Get out of your own way, get out of your own head, get out your own feelings, and just think like an entrepreneur. Think like a business owner. Think like an investor. Don't think like a consumer. See, if you think like a consumer, you're never going to get in. Because that's how they programmed you. They programmed you to not get in. They don't want you to get wealthy. They want you out here working and spending money to make them wealthy. That's the goal. So you can't think like a consumer. You got to either think like an entrepreneur, you got to think like a producer, you got to think like an investor. But if you're thinking like a consumer, they got you. They win. They win if you're thinking like a consumer. Oh, I'm afraid. Oh, I don't have enough knowledge. Oh, I don't know how to work the app. Oh, I don't know how to get into. That's a consumer. Oh, it's just easier for me to just leave it in the money market. I'm okay. Oh, I got a great job. They love me on my job. They'll never let me go. That's a consumer. Over here as an investor, as an entrepreneur, right? As a producer, as a shareholder, you're thinking about, okay, I don't want to depend on these folks. I want my assets to be what I lean on. And I don't have enough of them right now. I need more. I need these assets to produce $10,000 a month in income. I need more. See, that's how producers, investors, entrepreneurs, that's how they think. They're never satisfied until they're 100% taken care of by their assets. That's how entrepreneurs think. That's how producers think. That's how investors think. They don't let fear get in the way. They don't let a behavior, they don't let an emotion get in their way. Oh, Richard, I only got $100 a month. Get started. Get started. $100 a month will get you started. It will get you down that path of becoming thinking like a millionaire, thinking like a producer, thinking like an entrepreneur, thinking like an investor. That $100 a month. And if you don't have $100 a month to invest, guys, right now, whatever you have to invest, get started. Here's what I recommend. Sell some of that stuff that you got that you don't need. Get online, get on eBay, get on wherever you get on, whatever retail platform you want to sell it on, sell it. Take the proceeds. Make sure you got your emergency fund tucked away. Make sure you got high interest rate credit card debt paid off. And then the third thing, invest. I tell y'all this quite a bit. Sell all that crap. Sell it all. Don't keep nothing that's not essential to life. Sell everything that's not essential to life. And then take that money, get your emergency fund together, 3 to 6 months of your expenses. I'm not talking about including your nail shop appointment, your hair shop appointment, your round of golf with your buddies appointment, you're going to Ruth Chris Steakhouse appointment, I'm going to Atlanta this weekend and see the fellas appointment. No, none of that's vital to living. None of that's essential to living. That's all consumer stuff. That's all keep you broke, keep you working stuff. None of that's essential to life. None of it. I don't care how you try to rationalize it, none of it is. Cut all that crap out, get your 3 to 6 months emergency fund, excluding that crap, and then concentrate on any high interest rate credit card debt you got. If I got a car that I got a high interest rate on, or maybe I have a low interest rate, but I got a high car payment. Remember that Dave Ramsey story, $500 a month, 8% rate of return, you do it for 40 years, you got $5 million. I'm just telling you. So if you're paying $500 a month for a car payment, you're driving a $5 million car. That's what Dave Ramsey said. Dave Ramsey said, you're driving around in a $500 a month car, you driving around in a $5 million car. That's basically what you're driving around in. Just saying. And it makes sense. It's true. But see, we don't look at it like that. But it's true. Dave Ramsey is 100% true when he says that. That's the truth. And that's how you got to think about it. Then when you get those car loans, sell the car, number one. That's where I was going with this. High interest rate credit card debt, you got to pay it off. You got a car that you got a big car payment on, sell it. Get rid of it. Get rid of it. Go get you an A to B, a good dependable A to B. Preferably if you got the cash, pay for it cash. Under $10,000. Right? And then now we're ready to rock and roll. Now we're ready to really up our investments. Now we're ready to really build wealth. Because now we're going to take all that money that we freed up when we tighten up our budget. We paid off this debt. Now we got this money left over that we can start plugging it into investments. The critical piece is you got to take an inventory of all this crap that you own and sell it. That's the key. Because that's where you get the big windfall of money. Because I guarantee you, we all got attics. We all got basements. We all got garages. We all got a broom closet. We all got a storage unit. We got a bunch of stuff over Mama and them house. We got a bunch of stuff over my cousin and them house. All us got that. We got to sell it. We got to sell it. Turn it into cash. And then take that cash and get the wealth. That's what you got to do. Right? If you're willing to do that, and you're willing to get on this long-term journey with me for the next 10 years, and you're willing to listen to what I'm telling you on this YouTube channel and take some of that information and execute on it, you'll get to wealth. It ain't nothing fancy. I ain't got no fancy stuff on here. This is just me giving you my 30 years experience. That's all. You can take it or you can leave it. I'm gonna get to my freedom no matter what you do. I'm getting mine. I guarantee y'all, if y'all rock with me long enough, you're gonna see me with that piece of land in the Caribbean Ocean. If Lord's will, if I'm still here now, if he called me home, okay. But if I'm still here, somebody gonna be rocking with me in 10 years from this YouTube channel. Somebody gonna be rocking with me. And y'all gonna see I'm gonna have that piece of land in the Caribbean Ocean. Somewhere, some desolate, well, gotta have some Wi-Fi now. Gotta have Wi-Fi. And gotta be able to get, gotta get off the island some kind of way every now and then, right? But I'm gonna have it. My point is I'm gonna have it. And that's my goal, right? That's my retirement. And then just travel the world. Somebody gonna be rocking with me 10 years from now. And I'm gonna have a conversation with some of y'all where y'all gonna say, you know something, Richard? I thought you were a little bit crazy. I thought you were a little bit over the top, but let me tell you something, man. I followed the blueprint. I trust the process. I did it for the 10 years. And I gotta tell you, man, my net worth is great. Somebody gonna tell me that. Somebody gonna tell me that in 10 years from now. Somebody is gonna tell me that 10 years from now. I know it. I can feel it in my soul. Somebody gonna tell me that. And I can't wait to hear it, because boy, if I hear that from somebody 10 years from now, y'all, see, that's priceless. There ain't no amount of money in the world is gonna make me feel like I'm gonna feel if someone tells me that in 10 years. Richard, I followed the blueprint. Thank you, man. I'm better off today than I was 10 years ago. Thank you. Then guess what? I look back on this time, man, I'm gonna say it was all worth it. More than the money, it was all worth it. It was all worth it. So I can't wait for that day. I know it's gonna come. Lord's will, I'm still here. I know it's gonna come. So I hope y'all get on board, man. Get down to that description box. Take a look at those links I got down there. You got the Moo link. Get the 10 free fractional shares of the Magnificent 7 stocks when you put $100 in your Moo account. Come rock with me. That's my primary brokerage app that I'm using to double my net worth over the next 10 years. Come rock with me. Sign up for Moo today. Put your $100 in there. Let's get to work. We got 10 years. Let's get to work. Let's make sure we get you to your financial freedom. Next thing I want you to do is check out my website. That's the second link down in the description box. Yeah, I'm self-promotion. I'm gonna promote my businesses. It's my YouTube channel. So you can dip out of here if you don't want to hear it, right? Dip, go ahead and leave. Thank you for coming. But the ones that want to hear it, I'm gonna say it every day because it's my channel. So if you don't like it, hey man, you can always click the button and get out. I'm cool, I'm okay with that. Thank you for the time that you spent. So second link down in the description box is the website address, www.richardfain.net. That's the new website. Go check it out. Great digital products that I handpicked that you can make an investment in you and help yourself get to your pot of gold at the end of the rainbow. Try out those digital products. A lot of you have, so thank you. A lot of you have bought these digital products. You made an investment in yourself, and that's the first step. Because the investment you make in yourself is the most important investment you will ever make, guys, is that investment in you. You're investing in you. You're coming out of your fear zone. You're coming out of your pessimistic zone. You're coming out of your consumer zone. And now you're starting to turn yourself into what? An optimistic person. You're starting to turn yourself into somebody with courage. And you're starting to think like an investor. You're starting to think like a producer and an entrepreneur. That's the process you got to take yourself through. Those digital products will help you do that. So go try out a free one if you don't mind. That will help me just like it's going to help you, right? And then if you want to go a step further, there's a little yellow button you're going to see that says membership when you go to the website. Now, you should see it on your phone. You should see it on your laptop, however you get in there. You should see the button. It should be a button that is a green, not green, it's yellow. And it should say membership. That is the mentorship group. That's where I personally have a group of mentees that I work with on a daily basis through my Discord. I post there every day. Every week we have a 90-minute private live stream where they get to ask me questions, right? So that's my mentorship group. If you want to be a part of that, it's a paid mentorship group. It's $15.99 per month. Now, if that's too much for you, then guys, don't do it. Watch the YouTube channel. But if you want access to me, where I'm going to get your direct message through the Discord and answer it, and you can do that 7 days a week, 365 days a year, yeah, that's the value add. I'm not going to do that on YouTube. So that's not going to happen on YouTube. What I do on YouTube is exactly what I'm doing now. I give the information and poof, I'm gone. If you want to be mentored, join the paid mentorship group through the website. That's where you get mentored at. Ain't no mentoring on YouTube other than through the videos I'm doing right here. That's it. But all that question and answer stuff, I'm not doing that on YouTube anymore. I'm doing that through the mentorship group. So if you want access to me through the mentorship group, hit that yellow button, website, hit the yellow button, pay your $15.99 a month, join. No, I'm transparent. I ain't trying to, bait and switch you. Oh, I'm not going to tell them the price because they may not go the way. No, I ain't one of them guys. I'm going to tell you the truth. I ain't one of them guys. I'm going to tell you the truth. Yes, it's a cost. Why? My time is valuable. See, my time is valuable. My time is valuable. And if I'm going to take my time to answer your question, we got both have skin in the game. We got to have skin in the game, both of us. So hopefully you understand that. Then the last thing is get down to the description box, click on that Instagram link, Richard Fame Millionaire Mentor Instagram link. I'm telling you guys, we're going to get this thing back up to the 90,000 members we had in the last one that they shut down on me. We're going to get it back. If that's the last thing I do, we're going to get that thing back to 90,000 people. Right now we got 3. So we're a long ways away. But guess what? I'm committed. Every day on this YouTube channel, I'm going to mention it. Every day on this YouTube channel, I'm going to mention my website. Every day on this YouTube channel, I'm going to mention Moo. Just get used to it. Rock with it. Don't rock with it. It's okay. Because I know I'm the only one, right? I'm the only one who can do this for my channel, for me. I'm not going to ask anybody else to promote me. I'm going to promote me. I'm the biggest cheerleader for me. If I won't cheer for me, who gonna cheer for me? If I don't promote me, who gonna promote me? If I'm scared of my value that I'm adding, if I don't think I add no value, who gonna think I'm gonna add value? I keep telling y'all guys, if you don't believe in you, nobody else will. I believe in me. I believe in me. All right, guys, appreciate you. Hopefully you got something out this today. Hopefully you're going to get yourself started, get yourself where you need to get to. I'm hoping. We got 90 days to zero in and lock in on this thing. Right? We got to lock in on this thing. We got to get laser focused for these last, 8 months of the year? June, July, August, September, October, November, December, 7 months of the year. We got 7 months left. We got to zero in, get laser focused on this wealth. We got 7 months before we're in 2025, right? We got 7 months. Let's not waste it. Let's not waste one day. Let's be in the market every single day every single day the market's open. Let's be in the market every single day the market's open for these next 7 months. And then on December 31st, we'll celebrate and get ready for 25. And we're going to do that every year for the next 10 years. I'm going to be here every day for the next 10 years on this YouTube, as long as they keep me on the platform. Now, they kick me off the platform, I'm gone. But if they don't kick me off, I'm going to be here every single day for the next 10 years. I got to travel tomorrow somewhere, but I'm going to have this live stream. I don't care if it's on the road, because see, I'm committed. There ain't going to be one day go by that I don't have this live stream if God's willing and I'm healthy and I can do it. I'm going to find a way. Why? Because I'm committed. I don't let nothing get in my way when I'm committed. See, I'm committed to you guys. Well, all right, man. Appreciate you. Get down there and click all the links now. Support your boy just like I support you. Y'all know how we rock. Support me like I support you. Hit that like button too before you get out of here. I know many of y'all have hit the like button and I really appreciate it. So thank you. Hit that like button before you get out here. I'll be back tomorrow, 10:30 a.m. Eastern time. I may be in a different location, but that's okay. I'm going to be here. I'm going to be here. So, hey, man, y'all have a wonderful Wednesday. Hopefully you'll get yourself in the market and buy you some assets today. I hope you do. Hopefully you'll get over and join my mentorship group so that you can have direct access to me as your mentor and have that personal relationship with me. I hope you decide to do that. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'm going to catch you guys on the next one. Peace.